What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 14th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to provide my personal verdict on the current environment for altcoins versus Bitcoin. As we approach a lot of interesting events from the current global environment that's taking a generally risk-off narrative and is looking for hedges, as well as considering the halving event coming up in the next coming weeks, I've had this question asked a lot as to whether or not I'm positioned in mostly altcoins or Bitcoin. And many people know that I've been positioned in altcoins for the most part, so I want to go ahead and talk about that and whether or not that's changed and where I currently stand for the next coming months to the next year. And along with that as well, we've also got a sponsored review of the Cleo.1 platform. So for those of you who are interested in algorithmic trading strategies without having to learn any code, I recommend you stay tuned for that. It's a full platform review towards the end of the video. All right, so let's go ahead and just take a look real quick across the board of the market. We'll dive straight into the topic. We can see here the vast majority of cryptocurrencies are trending upwards. A good amount of them again in a no trend scenario as well, with most cryptocurrencies again being in the green here. And some of our plays, such as Kyber Network, being up 4.6%, Ren up 4.7%, and also Binance Coin leading the way here alongside Komodo at around 9 to 11% here. So good amount of cryptocurrencies doing well here. But I want to go ahead and dive into this topic. Just get straight into it, guys. This is going to be the major subject matter today. So the main thing I want to talk about is whether or not I'm currently positioned in mostly altcoins or Bitcoin. I'm going to be a straight shooter here, guys, and just let you know right away. There hasn't been a significant change in my positions at all. I'm mainly still in altcoins, as I've been, kind of talking about since back here in September and August of 2019. This is when I really flipped the coin here as I started to spot a trend reversal between the SMS indicators, along with that as well, generally kind of topping out at a range here where we've seen resistance in the past. This was an area where I saw a lot of potential. Now, I'll jump back to this chart here. I know that this might look a little interesting to you guys if you've seen Bitcoin dominance before. This is actually an inverse Bitcoin dominance chart. If we go to the normal Bitcoin dominance chart, which we used to look at, we've had this written for months. Again, we pointed out the historical resistance. We talked about the SMS indicator, which uses the squeeze momentum, the MACD, and the stochastic RSI, and we used them on a weekly time frame to determine a trend shift. And we could see as early as here, again back in September, that shift beginning to form, right? And there was a lot of early warning signs, like the thin wicks here where we gave up a lot of our gains here for Bitcoin dominance on a couple of these weeks, but also just again keeping in mind the historical resistance. And ever since then, even though we did have a nice rally back here for Bitcoin dominance, taking off all the drawings, you can see that we're setting lower highs for Bitcoin dominance. So the way that I like to look at this in the sense of an argument for altcoins is to take a look at 100 minus BTCD, which is basically taking the total value of market dominance, which is 100% of the overall market, and subtracting the Bitcoin dominance, which gives you the altcoin figure here. So it's an inverse of the chart. And as this number goes up, this means altcoins are making up a larger sum of the market. To give a good point of reference here, in January 2018, when altcoins hit their peak, they made up over nearly 64% of the overall market's valuation. A crazy rise from just simply 2 years ago, where we were sitting at around less than a percentage of market dominance. Very big change here in the sense of how fast altcoins grew in such a short period of time. And I have no doubt, as we've talked about here on the channel, I don't believe we're going to see anywhere near those kinds of returns. At the same time, I do believe we are still setting up for an altcoin cycle. Now, let's just go ahead and talk about this and put it very simply, guys. So first off, in the sense of the technicals, I think the technicals speak just as truthfully as the fundamentals to a lot of the altcoin projects. First off, you've got a long-term wedge here where you've got declining highs here and rising support. It's been tested 2 times here alongside this general range of initial resistance and support, which again is significant here. And then the 2 major significant highs here for resistance have yet to be tested. And it looks like prices, again, are starting to break away from the line of support and push for that resistance line, meaning that the bulls are in favor here. This is how you read charts, guys. Again, you can use all the indicators you want, but as we've talked about before, when it comes to these neutral wedges where you have lowering highs and higher lows, what you want to look for is who's winning out here? Who's paying that premium in this case in order to anticipate a larger trend? And in this case, it's the bulls. They're buying it at higher levels. They're not even waiting for it to come down and test this line of support. They're actually getting ready for it to possibly break out. And market forces are not letting prices get down, meaning there are more buyers than sellers at that price or this dominance range, right? Again, we're not looking at per se a price here, but it's showcasing that people are buying in altcoins generally at higher prices compared to Bitcoin. Plain and simple. No need to complicate it. Now, I want to go ahead and put the kind of like, kind of the argument right on the center table here. And I think it's a fair argument. It's one of the few things that I would say would keep me back from getting excessively bullish on altcoins or expecting an altcoin cycle anytime in the next coming weeks. And that's the sheer argument of, well, Nick, as you were kind of hinting towards at the beginning of the video, we're in a global fearful environment. Global markets right now are, if anything, looking for hedges. And as we've argued here on the channel, I've talked a lot about not only gold and silver doing well, as gold is back to a $10 trillion market cap, but also Bitcoin becoming a $1 trillion store of value here in the next cycle, possibly $1 to $2 trillion, and really evolving as an asset. Can altcoins keep up in this environment that are usually seen as more risk-on assets? And I think that's a very fair argument. In fact, it's probably one of the biggest things I would want to bring up here in this video. The reason I want to bring this up is because it builds me towards my position of being quite neutral on altcoins right now. I do not see much downside potential here for altcoins, generally speaking. You can see we're building into the wedge, and you guys know where I stand. I believe that risk-taking is going to increase in the sense of the crypto market eventually. And therefore, as Bitcoin goes up, we tend to see that altcoins have cycles in between Bitcoin's longer term, near 4 or 5 year cycles that we've seen in the past. Again, the cycles are getting longer. They're adding about a year each time. And I have no doubt that we'll see 1 or 2 altcoin cycles in between that. Are they going to be to the same dramatic measure that they were before? No. Are they going to happen per se at the exact same times? Probably not. The major thing to take into mind is that on a risk to reward profile, at least from my perspective, again, it's not direct financial advice, but when I look at the chart here at around 34.6% market dominance for altcoins, I don't see much downside here. We've already had the vast majority of the pullback here. In fact, if we were to just rough this off, knock down a few points at 32, it's basically 50% of where it was back in December. So what would be a very reasonable thing to happen here if we get a breakout, right? It would be to probably test up towards one of these levels that we've seen in the past. And again, I don't even want to make the argument that we'd break to new highs for altcoin dominance. I'm just saying I think that we're going to be testing towards one of these higher ranges, which means we have growth opportunities, not only for better returning investments, possibly, but along with that, to increase your Bitcoin position if that's your goal in the end, if you only really care about Bitcoin. I think personally it's just a responsible thing to do, at least for my risk profile, to have some exposure to other projects other than Bitcoin, plain and simple. There's so much going on, and this is where really I think, again, in the short term, Bitcoin and altcoins will basically hold together in this case. I don't think we're going to see altcoins decline much in market dominance. But over the next 6 to 12 months, I mean, we're talking, take a look at the weekly chart here. This is back in 2017, 2018. Now we're looking towards 2020, 2021, into 2022. And why do I personally think we could see, again, prices start to weigh in here and eventually start to move outward? Just drawing some lines here to indicate that we would eventually get a continued breakout here going into 2022. Why would we see this? And it has to do with the continued development on not only projects that have been in this space, but predominantly in the DeFi space in cryptocurrencies. One of the biggest evolutions we've seen is not only the continued improvements on the Ethereum network, but we've seen all of the applications and the projects that have been building on top of it, continuously building value and use case for the Ethereum blockchain. Now, I want to be very clear with you guys. If you look at the DeFi space now, I have no doubt that people will likely have a kind of a middle ground view. A lot of people look at it and go, wow, this is really exciting. There's a lot of innovation here, a lot of things going on. But at the same time, it's early, right? We haven't really seen it scale out to a larger audience. But it's certainly been one of the greatest traction drivers for the Ethereum network. We can see here on DeFi Pulse the current amount of Ethereum locked up in the DeFi movement or decentralized finance movement. And we talked about this on the channel a lot. We will, over the next coming weeks, to the next month, guys, I will try to spend some time diving into the DeFi space here and talking about some of these applications. But we can see here that a large amount of Ethereum is locked up inside these smart contract applications on the Ethereum network, from large players like MakerDAO, which has created the stablecoin DAI, which is collateralized with Ethereum and other virtual assets. And along with that as well, we've got things like Compound that allow you to earn interest on not only cryptocurrencies like Ethereum, but also on stablecoins where you can actually earn a decent interest rate. You have InstaDApp as well that does lending operations, Uniswap, which processes decentralized exchange trades, DYDX, which in this case allows you to do margin trading and be able to borrow capital to do that margin trading, and things like Set Protocol, which does portfolios, Aave, which is also lending, and Nexus Mutual. So all kinds of really interesting stuff across the board here. And what's cool here is that there's a lot of tokens out there. There's a lot of cryptocurrency projects that are a part of this DeFi movement. One of those that we've talked about that's actually doing great today is Kyber Network. Take a look at the daily here. Looks like we're finally starting to get to the point here where we've set a significant higher low, and we might be setting up for a continuation on the really stark uptrend we've had over the last coming months, right? We got bullish back here, if I remember correctly, back here in December, around 2,500 sats. And so far, it's been one of the best performing altcoins in our portfolio. Now, give or take, in this case, of course, we've had a pullback, right? But at the same time, my time frame and my targets are not here at 10,000 Satoshis. Again, I'm looking at these altcoins at being able to not only get back up to some of their previous levels, but possibly get to levels we haven't seen yet. And it really depends on, again, two things developing over time: increasing fundamentals and actual use of the applications. And no doubt, with any token, with any project out there, with any new emerging technology, there's rampant speculation. No doubt about it, guys. It's something you have to factor into prices here. And as an investor, just like how if I were to look at an emerging tech company or an emerging, company that's just IPO'd of some sort, that's doing something revolutionary or is in a new emerging industry, I have no doubt that speculation can carry valuations to very exacerbated levels, which provide great return opportunities for trades and investments, right? So this is something, again, I think is a pure example. This Kyber has built some really solid fundamentals. And I have no doubt that as it's aiming to be the base liquidity layer for a lot of decentralized exchanges, again, one of my favorite use cases in DeFi, it's going to get a lot of support over the next coming months. Again, it's one of my favorite plays. I'm not saying that you guys should be bullish on it. Do your own due diligence. Look into it. It's not financial advice. Along with that, Ren is another one as well. Ren is working on doing basically liquidity pools for DeFi and really trying to bring in a sizable amount of institutional liquidity here for cryptocurrency trades and transactions. Again, I would say kind of in the mark of DEXs at the end of the day, but there's a lot of applications you can build with what Ren is trying to create. So a little more complex, but I recommend you guys look into Ren and just give it a chance. One that's not really in the DeFi space is Basic Attention Token, but this has just been one of the clearest use cases for a token in this case as a reward mechanism, not only for people who browse the web, as many of you probably use the Brave browser. We're using it right now. The Brave browser has reached over 10 million users. They have had their earning mechanism for mobile on both iOS and Android, and they're getting to the point where the token supply is basically at its cap. It's just a few million away from reaching its cap. And when that happens, the only way you can earn BAT is through advertising in this case. So there's demand in this case from the advertisers having to buy tokens in order to get ad space through the Brave browser. So again, really interesting project. I've been keeping patient on this one because I do feel this is going to come raging back when the overall supply is stagnant and we see continued growth in users as we've seen over the last 2 years. So these are just a few examples, and of course you all know I've talked a lot about Chainlink. Chainlink been killing it. It's been killing it here over the last couple of days, getting back up to a range we saw back in early March before the sell-off. And again, this is working on decentralized oracles. So again, I've probably rambled on a little bit here, guys. The major thing I want to emphasize here, the lesson that you can take away here in summary, is that there is, in my opinion, right, I personally, and the reason why I'm positioned in altcoins is for this reason, I don't see much downside potential for altcoins. In fact, if you're positioned in the right ones right now, in this environment where altcoin dominance might be stagnant until sometime late in 2020 into 2021, you still might be able to increase your Bitcoin position. You might still be able to see a greater return than Bitcoin. And above all, in my opinion, diversity is a safer bet here in this case than just betting on Bitcoin. Plain and simple, especially when markets are on the lower end like this. So again, always want to drill that home here. Diversity is important in the sense of your portfolio. And along with that, in my opinion, I don't see much downside potential. At least the wedge doesn't showcase this. At least price doesn't show me this. And the fundamentals have certainly got me excited, no doubt. All right. So I'd like to hear what you all think about this. I know we didn't dive into a lot of news. We didn't talk much about traditional markets today. I just wanted to dive in a little bit into talking about this because, again, you all, if you've been in the cryptocurrency space, probably know that altcoin cycles in this case are very important to spot. They come far and few in the crypto space, but when they do, they come raging in. And you get to sense a lot of innovation throughout the crypto space, a lot of speculation, a lot of interest in crypto markets and new projects. So again, keep an eye on those things as we go over time. We'll continue to cover it here on the channel. And if you haven't already, definitely consider subscribing to the channel, hit the bell icon, join the Data Dash family. If you like the video, please drop a like, guys. It's always appreciated. But I would love to hear in the comments whether you agree or disagree. Definitely leave a comment down below on your thoughts. And please try to explain your rationale for it, guys. We can only be as smart as the ideas that are built around us. We have to continue to share with one another, learn from one another, and keep an open mind above all. All right, so let's go ahead. Seeing as we're talking about altcoins and trading and keeping an eye on market trends, let's go ahead and dive into our sponsored review for Cleo.one. Alrighty, everyone, so let's go ahead and spend some time to take a look at today's sponsor, and it is no other than Cleo.one. Now, for those of you out there who have been keeping active with the channel, Cleo will be a familiar name to many of you out there as we've been continuing to explore the platform step by step and go through the features that it offers. But for those of you who are seeing them for the first time, to put it simple, Cleo.one has been able to democratize the ability of creating algorithmic trading strategies, something that again has attracted a lot of interest from people, not only in traditional financial markets, but in cryptocurrency markets especially. But the problem for the last couple of years really in the space has been that you either have to have a ton of money to get someone to go out and build one of these custom strategies and program them, or you have to have the knowledge of languages such as Python or R in order to be able to develop your own custom strategies. And it can be very time consuming and tedious. So what Cleo's been able to do is, through a clean user experience and a wide range of functionality, give you the ability to be able to plug into all types of different indicators and systems and build your own custom trading strategies that are automated to work while you're not looking at the charts, while you're basically going about your daily life. So it automates trading in this case, and it gives you the ability to get really custom with how you go about doing it. All right. Now, I talked a lot about that in the sense of the kind of broader concept of what they offer, but in the review today, I'm going to dive straight into the platform. And I want to start off here by just going ahead and talking about probably the most key thing in any application. Once you register, the first thing you should focus on is the sidebar here, which is going to help you navigate throughout the app. Now, the first thing that they really propagate here at the top, in the top left, is all the major functions. You can create custom strategies. Again, you can register for a free account today and get started and just start messing around with the strategy builder and build your own strategies. You can open up specific individual trades once you plug in your exchanges. You can do paper trading, so you can just test out your individual one-off trading strategies. And again, as I mentioned, you can connect your accounts. So this is a very important feature here. This is really where you can kind of put the pedal to the metal in this case and really test out your strategies. After you've done the equivalent of paper trading or back testing, you're able to actually take these strategies onto real exchange trading pairs and actually put real money to work. So again, there's all kinds of different features to make sure you prepare yourself for that before you really make that connection. But again, it's exciting to know that this has become accessible to a lot of people, and they keep it very simple. Now, outside of that as well, we've got our My Strategies tab and the Free Strategies tab. So there's not only free strategies that just come with the platform that you're welcome to plug into your account in this case again, or just take a look at in the strategy builder. But along with that, you have the My Strategies tab. And you can see here that I built all kinds of strategies here. One that's focused on dollar cost averaging, some that, for example, are an alternative to the SMS indicator suite that we use here on the Data Dash channel. And alongside that, things like a run to safety strategy, in this case for Bitcoin, that basically does swing trading in Bitcoin and basically cashes out when it turns out that there's a certain downturn in the market. So we'll take a look at some of these strategies as we go through, but I want to go ahead and just dive straight into the strategy builder. Let's just go ahead and just see what it looks like to actually start building strategies for any kind of cryptocurrency pair, right? So we go here to the top left, create new strategy. And the one thing I want to emphasize here, we're obviously going to be talking about the crypto section here, building custom trading strategies for crypto, seeing as we're predominantly a crypto channel. But you all know, I've talked about not only Forex markets a bit in the past, as I've previously traded and invested in Forex, but along with that, equities are also an opportunity here. So you have 3 different markets that you can actually build strategies around here. So if you want to trade traditional stocks, Forex, currency pairs, and crypto, they cover a wide range here. I think the power really comes in here, though, in crypto, because there's so much volatility in this market and so much opportunity, where, again, I think crypto is really the selling point here. Now, I want to go ahead here and talk a little bit about this section here. This is the strategy settings. Good news is you can change this later on if you want to change a variable in this later on. It's not final. But basically, the trading strategy settings tab here is basically where you're going to be setting in some key information. The first thing you're going to specify is what exchange you want this strategy to be on. It's very important to select the right exchange here, because we're going to have to make sure that our strategy understands what exchange we're pulling into and also what currency pair we're pulling into. Now, this is important to understand as well. They have an information bubble here, again, to just make sure you understand here. But this is the secondary currency or asset in a given pair. So if, for example, I was trading Bitcoin to USD Tether, in this case, the currency that I'm starting out with is USD Tether. So that's my market currency. That's what I'd be buying Bitcoin with, and then I'd also be selling my Bitcoin into, right? If I want to sell my Bitcoin position, I go into dollars. So in this case, we're going to keep it simple. The USD Tether, it's one of the more liquid pairs on most exchanges like Binance. And we'll go with an initial balance. This doesn't mean we have to have $10,000, but this is our back-testing initial balance. And we're going on a time frame of 1 hour here. This is good. And we'll do a full year here in the sense of the range for the back test. All right. So this is the strategy builder here. It's already going to start propagating us to start putting in some indicators, some different data sets here. And again, you guys can run wild with this. I really want to emphasize here, we're not going to build so much a custom strategy here. We've already got some that we'll dive back into in just a moment. But what I want to emphasize here is how to navigate the strategy builder and just how much data and information you have to work with. I mean, it is an information overload at the end of the day. I'd say, if anything, you've got a problem of too many indicators to choose from. And they come from not only just crypto markets, but other markets, as we talked about earlier. So, for example, you've got over 89,000 different data sources. In this case, you can pull in the price of any given asset. In this case, so maybe when the price of, for example, Bitcoin goes to $6,000 worth of USD Tether, then in that case, we sell our position, things like that. But I want to go ahead and just, again, spend some time here to dive through some of the individual aspects here. You have favorites here, which again are going to highlight some of the key things here, things like the VWAP, MACD, the RSI. Again, some of these are some of my favorites personally. We use the stochastic RSI, we use the MACD, and our SMS indicator. You can get crypto fundamentals, so we can go down not only to individual cryptocurrencies in the sense of their market capitalization, but we can also get a measure of their individual dominance in the market. I mean, this is incredible stuff, guys, the kind of detail. Whereas, for example, on most platforms, all you can really get is access to market dominance for altcoins as a whole or Bitcoin. We can get down into very small pieces of data here. We can look at the volume of these individual cryptos, and we can build very unique scenarios where we compound these technologies together. We can see here as well, we've got our technical indicators, nearly 50 different indicators to choose from. And we can, again, change the variables of these underlying indicators. But there's nice pictures here where you can actually see a description and a visual outlook on what these indicators are. If you're new to it, just to understand how they work, very brief nature. And along with that as well, you've got different currency pairs here. So again, if a currency that you're looking at that we might be trading in terms of Tether might be acting a certain way against BNB, then that can be irrelevant to us in our strategy. We could build really interesting things. Again, you can cross over into other markets. As we've talked about on the channel, I'm a macro trader. I always try to find ties between different markets. In this case, you can use Forex pairs in this case. So we can click here and we can get all the major Forex pairs. And outside of that as well, we can connect equities. So maybe, for example, if I was building a Bitcoin strategy, I might want to tie it to NVIDIA somehow as being one of the major GPU producers, which produces a lot of the mining equipment for cryptocurrencies like Ethereum, right? And then outside of that, international equities in this case. So you've got so much data to work with, guys. Again, information overload, if anything. But I want to go ahead, and I say that in a positive way. I want to be very clear about that. I think it's really the sky's the limit with how creative you can get on this. There's infinite possibilities at the end of the day where people could really make this their own. But let's say, for example, we wanted to just go ahead and use the MACD here. So I wanted to go ahead and I click the MACD here. It's going to ask me when the MACD is blank. So I have to basically set one of these values, and I could say maybe is up by, and maybe I want to select a certain percentage over a certain time period. Maybe I want to do a specific amount of value. In this case, maybe over a specific set of candles or over a daily basis. I could say maybe, for example, maybe we want to do 2.5%, and we want to go back and edit the condition. It's going to give us the default one here, and we could go and say, in the last day, for example. Right? So we just changed the value there. And the nice thing is, in doing this, we don't have to know any lines of code. I didn't have to program anything in Python or R to do that. And what's nice is I can continue to add values. I can say when the MACD is up by 2.5%, and I can say when the RSI is up by a certain amount of value, right? Again, we can add on as many variables as possible, and we can also do an OR function in this case, or maybe there's a different set of scenarios that are playing out where we have one or multiple indicators signaling maybe a buy side action in this case. We can have it in our strategy where there are multiple different rules here, where not all of them have to be met, right? But we can have different rules that will trigger that buy activity, or possibly a close rule in this case, where we would actually close out of our position. And we can say the same thing here. If the MACD, for example, was to go down, for example, is down by the same amount here, and we can again change the variable in the last day. Just hit enter. Again, we just created a rule set here. Now, you'll see here as well, the nice thing that Cleo does here is they've continuously improved the user experience on the website here, and they make it clear here what you're missing before they can actually go ahead and finalize the strategy. And the first thing here that we haven't done is we haven't set the asset and the volume that we want to buy in this case, and we're going to need to do this before we can actually backtest our strategy or deploy it. So the way that we do this is we go and clicking on Add Asset. In this case, you'll see all these different cryptocurrencies we can buy on Binance against Tethers. There's a lot of different pairs against Tether in this case. So let's say, for example, I wanted to buy something like Bitcoin. We'll just keep it simple. A lot of people want to build algorithmic strategies to trade some of the larger cryptos against dollar pairs. So in this case, we have to specify volume first. We've specified our crypto. Now, how much do we want to buy here if our rule goes off, or if one of our rules goes off, right? Well, in this case, again, we could be very simple. We could buy a specific amount of Bitcoin. So if we have, enough to buy 1 Bitcoin, we could just type that. In the sense of these different options, we have percentage of balance. So how much of your available balance of Tether do you want to use? The percentage of your initial balance. So let's say, for example, the strategy is traded a lot. Do we only want to use a specific amount of our initial balance in this case? So maybe we've grown profit, but we don't want to use that profit. And then also a static amount in USD Tether. So similar to the Bitcoin here, but just in the terms of our base currency pair. I recommend usually using percentage, and I would say here, just for simplicity's sake, we're going to type in 100. But this might not be what you want to do, right? Again, I'm not telling you guys to do anything specific. I'm not saying this strategy is a golden opportunity for you guys to make a lot of money. I'm just entering in some certain features here, and we'll dive into some of the ones that I've built that are successful in the sense of their performance. Now, the next thing here is a stop loss. This is not forced into the platform, but it is recommended. It's definitely recommended here, guys. Stop losses are one of the best tools that are offered to traders here to mitigate risk. Similar to options, they are a system that allow you to realize what potential loss you have, right? And as we'll talk about, where you can take profit, which is your potential return. And this allows you to have a risk to reward ratio. Now, in this case, let's say, for example, in our situation here, outside of our closed position, we want to have a general stop loss on any given trade of maybe 5%, right? It's a pretty active range here for Bitcoin that could get triggered. But in this case, we're going to go ahead and do percentage of market price, meaning if Bitcoin's price were to decline 5%, then in this case, or from where we entered, then in this case, we would close the position. You could also do a specific market price of a specific Bitcoin to Tether pair in this case. So basically, if Bitcoin were to go down to maybe 5,000 or 4,000, we could do that. And we could also do percentage of balance in this case, right? So, one thing I wanted to share as well, I almost forgot to mention, you can have trailing stops. So let's say that you've got this big long-term target and the price keeps going up and you don't want to lose all your profits. Well, you can have it where your stop trails alongside. And so again, adding a lot of great features here that don't become, that either aren't prevalent or available on exchanges. So this is really, really nice. I like this. I'm going to go ahead here and talk about the final part here, which is taking profit. Again, same rules apply here. You can also do a trailing take profit, right? So let's say, for example, you had a target, the price of the asset's going up and then it pulls back, right? That trailing take profit is going to do exactly the opposite of a stop loss, where it's going to actually come down and make your take profit a little bit lower. And then if prices come back up, it'll close out and you'll take profit in that case. So again, really fascinating stuff here. Again, I would do percentage of market price, and you could do 5%, or I would say probably, sorry, for our actual overall, we want to make a 50% return, and we could do the trailing if we would like. But in this case, I'm going to go ahead and skip it, click confirm, and we can see we have all three check marks here. We have our backtest and strategy settings, and now all we got to do is come up with a name, if a description if we'd like, and then after that, build the strategy. So in this case, I'm just going to do test strategy 101. And in this case, we'll skip doing a description for now, because again, this isn't really, I don't really know what's going to actually come out when we actually generate this indicator, as I'm just going ahead and just showcasing to you guys a general example here. And look at that, we've actually got a strategy that's been trading a little bit here. So over the last year, this has returned over 16.3%. We actually did really good initially here, almost doubled our money with this strategy. But in the end, overall, this has been relatively stagnant in the current Bitcoin environment. So the key thing to take away here is that there's a lot to work with here as we take a look at our strategy. We can see a general risk profile. It's probably showcasing to us that we're doing a lot of excessive trading here, that there's a lot of volatility here. We had this period where we did really well, and then back here where we dropped from 16,000 to overall around 12,000 for our initial balance of 10,000. We can see, again, a lot of data here, our average profit and loss per trade of around $7. We can see we make a net profit here over the last year. And we can see our final balance, annualized return, total return, or TWRR. We can see individual statistics. So we can dive in a little bit more in detail and take a look here at the different rules of our strategy. So if we have 3 different rules and we have a strategy that's being quite profitable, it might be that one of those rules are really the reason we're making money. So we might want to exclude the other rules if they're not really keeping us profitable, or if worse, they're providing a loss in this case and weighing down our performance. We can see a chart here that's going to showcase the given time period that we've selected, in this case for the given asset. And along with that as well, sorry, it just gives us a general like shorter term time frame. We can zoom out, of course, for the given asset that we're trading, which is Bitcoin USD Tether, but it'll show us all of our trades here. So we can go back again through the back test here and see that we did 235 trades over a year-long back testing period. Again, it's all paper trading. It's basically fake trading in this case. We haven't put up any money or anything like that. So that's the cool thing, is you can see whether or not these strategies work before you actually start putting money to work. It's very, very important. And again, backtesting is an even more difficult part in this case for a lot of algorithmic traders. In this case, it's another component that, again, you have to be able to go back and do. So again, Cleo making it very easy, providing all this data is really nice. You can see your rules. Again, you could create a new version, again, editing and modifying it. Maybe we wanted to remove or add a new rule set. And along with that as well, they have their trade chart alpha feature, which is coming soon. So we can see here, without a doubt, that there's a lot of data to work with. There's, again, a lot of information you can see before you actually start putting up real money here in the long term. But I want to go ahead and actually spend some time to dive into some of the indicators that we actually, or really some of the trading strategies that we built. One of them being the SMS alternative. And this is a swing trading strategy for Bitcoin. Now, again, you can see as we scroll down here that it's gone through different variations. In this case, you can get rid and archive certain versions. You can also see that the performance has changed over time. We can dive into each individual one. But I want to go ahead and dive into the latest version, version 5. And we can see here, again, we can dive into the same statistics. We can see our individual trades. But you can see here on some of the rules that we created. So we're using the momentum here, which is very similar to the squeeze momentum, and being up 20% in a day, and the stochastic fast in this case, basically the faster line within the stochastic RSI, being below 20. This is basically a buy signal in this case for us, and then alongside with that, a close condition of the RSI being down 5 in the past day, and the momentum being down 5. And we're trading Bitcoin in this case. So again, very simple Bitcoin trading pair that again provided us with some really steady results here over the back testing period that we have. All right. So this is one of them that we built here. Along with that as well, we've got the OpenClosed strategy for trading Chainlink. So we can go to our strategy here, click on the individual strategy, and we can see that over time this has just become more and more profitable here. Annualized return of 91.1%. The total return of the backtest period being over 287%. So again, this is one where we have a longer term backtesting period. The risk has dropped a little bit, and this is something that's important to mention as well, that these different strategies on Cleo provide things like the profit factor, the Sharper ratio, the Sortino ratio. Again, lots of stuff to work with here, guys. You can really make it your own. That's the beautiful thing about it. And again, we can always dive into the individual rules. And the cool thing here, again, that I want to emphasize as we go through, and actually I'll go ahead and just open up the modifier here. Again, as you can see right there, we're just basically put in to our strategy here that's already been existent for a while. Now we're building a new version. We don't just have to trade one asset. We can not only have multiple rules here that can initiate a trade, but we can also have multiple assets that we trade. So let's say, for example, right, let's go ahead here and modify our percentage of balance. Let's say we wanted to do 50% Chainlink, and then after that, maybe we wanted to do, I don't know, we're doing a Bitcoin trading pair, so we're going to trade an altcoin. Maybe we could do basic attention token. This has been one that we've talked a lot about on the channel, and it's on Binance, which is what exchange we're using here. So we could do BAT, percentage of balance, 50%. We could do the same here, 25% of market price for our stop loss. And then we could also do, for take profit, we'll do 75%, just like Chainlink. And we can go ahead, build a strategy, see what happens. Do we see a larger return? In this case, we don't, because Chainlink has been a little bit better performing here than basic attention token. But still, a profitable working strategy that's, again, using indicators that we've seen work consistently in the past. So, again, if we, for example, realize that the return is worse off in this case, we can go back. In this case, we can click on show versions. We can go to individual ones. I'm going to generally go back to my strategies. Here to show strategy. And in this case, I'm going to archive this version. And just like that, right, we archive it. It gets it kind of out of the view here, but we can restore the version if we'd like, so we don't lose it. So anyways, long story short, guys, the application itself works really well. And when you want to get to that point where either maybe you want to plug in individual trades, or if you want to start testing your strategies, you just basically have to go about creating individual API key pairs for each exchange and base currency pair. So a good example of this would be for our trading strategy earlier on Binance for tether pairs. So if we wanted to trade Bitcoin against USD tether, in this case, we have to create a new API key pair, in this case for Cleo, every time we want to do a different currency pair, one for tether and one for Bitcoin, and two of those probably for each of the exchanges we want to integrate, right? Depends on which ones you want to do. But again, the process is relatively simple. Basically, you have to go onto your exchange account. There's a section for API keys, and you're basically going to give it a name. I would likely type it like this. Kevin and I have talked about this. We usually do BTC Binance, right? So in this case, we're building a BTC pair. This would be like our altcoin trading pairs to Bitcoin. We have Binance selected, Binance US, and we would type in our API key in this case, and along with that as well, the secret key in this case. So again, you can see that was an example of one right there for the account. One of the accounts I plugged in. I've terminated the API key and stuff, of course, for it. But again, you would type in your API key and the secret key, which acts almost kind of like a private key in this case, to be able to actually have access to trading funds. You're basically giving Cleo permission to execute orders on your behalf. That's all it's doing in that case, right? They can't withdraw your funds. They can't do anything like that. It's just to be able to trade the funds in the exchange. So again, you can also check out the portfolio section. This is your live portfolio tab where you would see the returns on your strategies that are actually implemented. This is, again, one of the API key pairs that we have here. So we can do BTC pairs. But along with that, you can do paper trading. Again, much like backtesting, we can see here how our strategies would actually perform. So there's all kinds of information you can get before you actually, stick it to the ground and stuff and actually deploy one of your strategies. Now again, there's basic account settings, and the big thing that I want to talk about is subscriptions here, guys, and the pricing plan here for Cleo. The big thing I incentivize, go test it out. Try it out for yourself. It's free. You can go ahead, try the strategy builder, build your own strategies, see if you can make one that's shown consistency over the long term as well as general profitability. And if you want, you can sign up and actually start connecting exchanges and see if it works well for you. Now again, the prices here, again, right from the starter up here to the Trader Pro, again, depending on who you are and stuff and how much capital you have, so for some people it might be best to do the starter. And for those of you who are managing, tens, hundreds of thousands, if not millions of dollars in crypto positions, the Trader Pro feature might be better in the sense of the amount of back tests you can do. You can do up to 1,000 different back tests. You can have different assets per rule in this case as you go up to the higher different settings here. And again, they have everything laid out transparently here, so you can figure out what's available and what's not between the different services. Again, the big feature here is when you go to the paid plan, you'll actually be able to do live trading in this case. So you can't access the actual live trading in this case through Cleo until you join one of the packages. And again, if you do it yearly, it's cheaper than doing it bi-monthly. So again, you can see how much you'd save here with each plan. But that all being said, guys, that's going to be it for the review today. Thank you all so much for joining me. It's been great having Cleo as a partner here on the channel. I've gotten to meet Kevin and a lot of the team members as they've been progressing and building this. And quite frankly, I love anything that really spreads out the opportunity for people who are everyday traders and investors to simplify not only different aspects of financial markets, but to democratize something that again has been quite exclusive over the last few decades when it comes to financial markets, especially in an exciting new space like cryptocurrencies that provides a ton of volatility and opportunity. All right, that's it for the video, everyone. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.